The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you have markets picking up the week in positive territory. You check out the S&Ps. We slide to lower price on Friday. Quite a decline indeed. S&Ps hitting a 53 handle, 53.94 as we close out the session at about 5 p.m. Eastern Time Friday. You see where we open Sunday night, just above that price level, and it's been a slow crawl to higher prices in the overnight session. We'll find out where those prices really meet, supply and demand, when we hit the opening bell at 9:30. But nonetheless, we are higher to kick things off. You got the NASDAQ 100 up by about 141 points right now. That's about 0.8%. You got the Dow up 294, a similar 0.8% in the positive. The Russell barely positive by about 3 points right now. Bitcoin catches a bid over the weekend, up almost $2,000, up $1,800 at 55,500 for Bitcoin. How about crude? We got a 67 handle on Friday. We're approaching a 67 handle again. We just had one, I think. We did a few minutes ago. We had a 67 handle. I filled up my gas tank this weekend. 293. 293 is what the gas was near me. Now, that's Sam's. So a little bit more discounted than what you're going to see at the gas stations. But I was taking notice. I was sending my dad text. 293, right? Pretty remarkable in light of especially what a dollar buys you going across the board these days. Gold contract up about $6, trading at $25.31 right now. We check in on yields. The 10-year, negative 6 ticks at 114.26 right now. You see the gyrations on Friday, and where are we now? Kind of right in the middle of that range. We're going to talk a little bit about Friday's action as well. The 30-year, negative by 12 ticks right now, trading at 125.16. We jump over to the dollar index. Quite the moves on Friday, well above that price level. We have 101.56 right now on the dollar. We jump over to the VIX. VIX right now trading at 21.17, 21 handle locked in right now. This market, a little bit of volatility premium, as we will see where we go. Now, what do we got going on this week? So we have the Apple event going on today. Okay, so Apple, their event begins at 10 a.m. Eastern Time. And it's not like this is going to be the end-all for the market, but it'll be an important event. They're the biggest company in the whole world, and the expectations are sky high for a super cycle here. I've been talking about I'll probably get a new iPhone. I'm about 4 hours out from my cycle, so it makes 4 years in terms of, I think I have a 12 Plus, still a great phone, but the battery's beginning to suffer. Some of the bells and whistles I might appreciate. I can still get something back for that in terms of being able to turn it in if I do purchase one, but I'm not going to buy it the instant it comes out. I'm going to make sure that the software is in place. The software is not even ready yet. Apple Intelligence, when's that going to come in? We're going to get some software updates. We're going to get some phone updates. We're going to get some iWatch updates, and AirPods is what they're talking about. So you jump over to Apple shares, and they are flat coming into that event. And that event, I believe it does. Let's see. Is it 10 a.m.? I believe it's 10 a.m. I had a couple articles I was checking out this morning. There it is, September 9th at 10 a.m. local time. So that's going to be 1 p.m. Eastern time, right in the middle of the trading day. They'll do it. Yeah, and they don't normally hold these events on Monday morning. I'm sure they allow all this discussion on Friday, right? And then you come in where they are on Tuesday. But guess what? We have a huge slate of action going on this week. We have presidential debate tomorrow night, and then you have the European Commission to decide whether Apple's going to have to pay $14 billion in taxes stemming from the fact that they tried to set up shop in Ireland to avoid paying all those taxes, right? Pretty remarkable. And then we get CPI on Wednesday, Consumer Price Index. That's going to be an important one. We get PPI on Thursday, along with jobless claims, of course. You get the Michigan sentiment number on Friday. But yeah, so we got Apple today, presidential debate tomorrow. You get some ECB action in there this week, and the big data point in terms of inflation going to be CPI out on Wednesday, PPI out on Thursday. Apple Intelligence. This will be one of the things they talk about greatly. The new suite of AI tools that includes an updated Siri digital assistant will also feature prominently. Yeah, it's Glow Time, talking about Siri's new interface, okay? Now, what they talk about here is that, and I'm going back and forth between these two articles, but it is interesting in terms of wearables, okay? The lack of recent upgrades has weighed on sales of Apple's wearables division, which also includes home products and accessories. The revenue is poised to decline for the second year in a row. Decline, right, as this thing's been through the roof. Analysts expect the category to bounce back in 2025 with a 6.2% revenue gain to $39.5 billion. I almost chuckled. $39.5 billion, those numbers. And what they talk about is they had big upgrades 2 years ago. That's when you got that big Ultra watch, the one that's like, what can it go, 1,000 feet down or something like that in the water, right? Way more than what most people need. Raising the overall average selling price of the lineup. They also unveiled second generation AirPod Pros. And what did they have last year? None of that. So the comp sales last year are tough when you come from a year where you had new products for AirPods, you had a new watch, adding things. And they did not release AirPods updates last year. They only had 2 tweaks to the Apple Watch. And so, yes, the Series 10, that's going to get a new look, larger displays, packed into a thinner design. I like thin watches. One I have right now is super thin. And I have an iWatch, which I love. And I think I have a 6. iWatches are great, especially you go for walks, you go for runs. They track your heart rate, they track your distance, they track just a ton of stuff. Pretty cool. Steps, all that stuff. I don't need an update on that because that's still doing well. But it is interesting as they start pushing updates into these. And AirPods I love as well, but boy, they are super pricey. That's the one thing, the watch I appreciate. For the price of the AirPods, there's a lot of great earbuds that you can find on the market that you don't have to pay hundreds of dollars on that degree. But nonetheless, so Apple, they're going to be out at 1 o'clock today making headlines. But I think this is going to take a little while to roll out because you're going to see that only a couple, right? Only a couple models are going to be able to access that Apple Intelligence on the phone. These are all the details we're going to find out today for sure. And then they have to actually roll out that software in a degree where you're actually utilizing it. That's what I'm waiting for. So I'm in no rush. I'm going to let things sort out. It'll be interesting to see. You're going to have the fanboys and fangirls line up to get their new iPhones the day they come out. And I think what happens is that they're going to talk about them today, and then the usual timeline is about 10 days or so. So they'll be in stores. They'll be available about 10 days from right now. So you're talking about September 19th, September 20th. You'll start seeing that new lineup of phones, that new lineup of watches, maybe AirPods will be available in stores as we kick off the holiday season, right? Coming in. That'll be almost October. Black Friday sales are going to start on November. I mean, it is crazy, right? It feels like. I mean, we go to Target. Target's got Halloween everywhere. That makes sense. But it is intriguing how you can almost slide in a little Christmas with Halloween. You go to Sam's, I talk about Sam's, Walmart, they got Halloween decorations, man. They're out. They're there. They're right beside where you're talking about for your Halloween decorations. You got your Christmas decorations at Sam's out there on September 9th. But hey, Labor Day's passed. Coming into Halloween. And we are coming into a market in positive territory. S&P is up by 37. Stay tuned, folks. We'll come back. We'll talk a little bit of S&P. You got Palantir up by 9%. Dell up by 5%. Both of them being added to the S&P 500.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and technique to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, everybody. We got the S&Ps up by 37 markets in the positive right now. You're talking about a 10-year yield pushing 3.73%. 3.73. I may sneeze here. Excuse me. Sorry about that. Tried to get the mute button. Couldn't quite get there fast enough. Nonetheless, the 10-year sitting at 3.73 right now. I was going to pull up the chart of the 10-year. And as I mentioned, we get CPI data out on Wednesday. Okay, we were all the way up to 115.13. We're trading right now at 114.26. You jump over the dollar at 101.53 right now. All right, now I was talking earbuds. You know, listen, I love talking about Apple phones, right? Talk about all that good stuff. Talk about how much I love the iWatch. I do love it. And I love AirPods. Okay, the Apple AirPods, I have those as well. Those are great. But I'll tell you what happened. My AirPods, which are from, and I'm going to go back and forth here because I'm part of this super cycle, man. And that's where, you know, listen to yourself sometimes on this anecdotal deal because I'm just getting to where, yeah, you look at this run up, right? It was somewhere in these years here. I just told you that. So Tommy was born in February 2021. I got a phone towards the end of 2020. So here I am. I got a phone. I got a watch somewhere in these 2 years, 20 or 21. And I think I got AirPods during those years as well. Look at the drop off. right? Now, what is intriguing is I'm coming back. I'm going to be back at some point, right? I don't have the watch on today. I wore it yesterday. I love the watch. The watch is great. It still works phenomenal. No reason to replace the watch just yet at all. The AirPods, though, to get to the point, okay, the AirPods, they stopped working. Yeah. Now, I can take them in and get them looked at, and it might be fixable. It's the charging case, I believe, is what it is going on there in terms of the Apple charging case. They're not charging. I plug in the little AirPods. They don't charge. Nonetheless, what I do is, and I'm not spending another $240 right now for some AirPods, but point being, what did I do? Check out these, okay? Where did I just put it? Forgive me. Here it is. So, if you're in the market for AirPods, we'll jump around, folks. There's many competitors, and this is just the one I happen to buy. I bought it from Best Buy. I did. Now, these are mini wireless JLab earbuds. All right, they do everything else. They work with iPhones. They're tiny. They hold a pretty decent charge, and they're $30. So it is intriguing. And there's your little charger you get. You get a little charger. You do have to have a block. One thing, you do have to have a block if you don't have one. It doesn't come with a block. Interesting, right? As in, you can't even charge it if you don't have a block. You need the block. They only give you the cord. But nonetheless, if you are in the market, you want some nice AirPods, because what I do is, because I have my watch, which is why I love the watch allows you, when I go out for a walk or a little jog run, you can not bring your phone. And that was the coolest part of the watch, that I can go out, not be tied to my phone. I have texts, I have phone calls, I have tracking, I have music that plays while I'm out on that experience, whether it's a bike ride. I go biking with Tommy, we go for some bike rides, same deal. These tie into it. So I go out, I bring my watch, you have your earbuds, and they work together. But nonetheless, if you're in JLab Mini, and they're tiny, they're little tiny ones, they're $30 if you're in the market. I just said, hey, why not? Because yeah, they got quite a hump. I mean, they were first to the party. Do you remember when Apple came out with those AirPods, right? It was a revolution. Everyone said, man, you put these little AirPods in here, and now they're everywhere. So they got a problem on that front, I think. The watches, not so much, but selling their AirPods, it's going to take a lot for me to pony up $250 for those AirPods. And yes, there's a difference. All right, I get it. They got noise canceling. They got all that stuff going in there. But let me tell you, folks, the ones I just showed you from JLab, the minis for $30, they're great. They do a great job, for sure. All right, what else we got going on? Today, the first day for the Starbucks CEO. Expectations sky high. What happens when you go in to a company and they have billions and billions and billions have been added to the market cap in anticipation of you coming in? That news was announced when Starbucks was trading at about $77 on August 12th. Now, what's intriguing here is, what was the market on August 12th? Yeah, it's a little bit higher, I guess, as well. Well, not that much higher. Yeah, you got the S&Ps up a little bit from where we were on August 12th, just correlating it to where Starbucks is. Starbucks up a good $15 from where we were trading coming into that news event that he was taking over. And I bring that up because you jump over the Analyze tab, and Starbucks has over 1 billion shares outstanding, 1.133 to be exact. Yeah. So over 1 billion shares outstanding, and this thing jumps from 76 to 91. So they have added $15 billion in market cap, and today's the first day. And I'm a huge Starbucks fan. We were at Starbucks over the weekend as well. Tommy enjoys some good bacon and Gruyere egg bites, pretty healthy on the grand scheme of things. I get a nice cold brew coffee maybe in the afternoon. Love a good latte maybe in the morning, cold brew coffee in the afternoon. But yeah, he's going to be stepping in. The story begins today, and expectations are sky high. Fewer orders. Yeah. The main culprit was a decrease in transactions as inflation-battered customers cut back on iced lattes. Listen to me. And I am aware of it, let me tell you, but it is intriguing how that app, they get you. The app's been around forever, and I reload the app $25 at a time, and it is intriguing that then you just go and you spend the money. It's not exactly akin to spending cash or spending anything on your credit card because it's already spent. Now, some consumers are questioning if it's worth it to pay $7 for an apple crisp oat milk macchiato. You know, the one thing that is intriguing in terms of what they did for cold brew coffees is that they figured out people were walking in, they're getting lattes, right? They're paying $4, $5, $6, $7 for a latte. A lot of people go in, they just get their coffee. and they were trying to figure out, how do we get these people to come into the store? They buy a coffee for $1.79, but realistically, they're on the income scale where they can afford, if they wanted to pay $4 or $5 for that same coffee, like we have for people who like their lattes in the morning. And that's where cold brew comes in, because man, cold brew is like crazy expensive for what they're pushing out. That's my cold brew rant. It's delicious, but yeah. They talk about China in here as well. China's struggle. China's got some problems overall. We're going to talk about China deflation coming up later in the program. China owns and operates Chinese stores itself rather than using third party as it does in many other international markets out there. They got worker morale on the front. And then he's taken over basically for the founder. You take a look at a longer term chart of Starbucks, and yeah, quite a run. Up to 126. You make a double low at about $70. We're pushing 91. I don't know if that's a nice symmetrical pattern. Starbucks might be on its way back to 126. We'll find out. We're coming back for the open. We are going to take a look at Palantir. We'll take a look at Dell. Both of those into the S&P 500. Markets in positive territory. We're coming back to the opening bell.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got the S&Ps up by about 40 points right now. We'll get there. Come on. Starbucks basically flat this morning. There's your S&P, up by 40, trading at 54.60. NASDAQ 100, we're up by 158 points right now. Let's jump around and see how some of the Magnificent Seven Apple shares slightly in the red to kick off as their event begins at 1 p.m. Eastern Time, 10 a.m. local time. They'll be at their headquarters in Cupertino. 1 p.m. Eastern Time, you'll get some headlines coming from Apple. They're not expected to reveal any big shocks, but it's always possible when they're talking about expectations, AI, Apple Intelligence, phones, wearables, etc. As we've discussed, you jump over to Google shares. Google was down dramatically Friday. They claw back some of those losses, up by 1% today to 153.80. Amazon took it on the chin a little bit on Friday as well, up by 1.4% right now. You jump over to Netflix, up by 1.3% right now. And yeah, as we talked about, so Palantir, there's a lift for you, up by 8.4%. Now, this has been on quite a little run on their last earnings, yeah. We were down to 21.76 on that August 5th market spike low. But it is remarkable. That's almost right where you kicked off the year. You got Palantir up from $21 to $32 this year. You're up by 8.2 as they're going into the S&P, and Dell up by about 4.5% right now. Dell, they're going into the S&P as well. American is out of the S&P, I believe, and one other company, CS or something like that, out of there as well. But the airlines, I'm looking at American, up by 2.2% right now. We jump around. Delta, up by 1.6% right now. United, up by 2.3%. The airline's catching a bid. Even JetBlue, you got to love it, up by 3.8%. Even JetBlue. All right, what else are we talking about? This one's an interesting one from the Journal. Just a couple of different data points that they have in here. That's not it. That's the headline. Where am I? Excuse me. Well, this is the one I was reading. I guess I already pulled it over here. The state of America's wallet. How cards, cash, debts, and assets we carry stack up. And they just take a look at the last few years in terms of where we are, where we've been. Changes in income. Now, they adjust this for inflation, which is interesting. And you'd be above 2019. Not a lot of people would think that, right? When you get, and I'm not saying you, right? But when somebody gets a 4, 5, 6% annual raise, they get that on a 3-4 year basis. Yes, you're compounding that to 20 to 25% higher. Doesn't feel like it when a lot of that money is gone, but you're keeping up with inflation. And that is the persistent problem of perceptions across the board. Americans make more money than they did at the end of 2019, even after adjusting for unusually high inflation since then. Compare that to the rhetoric that you see out there, right? It's a tough one. When inflation has eaten the buying power that you have, people don't really care because they want to see. I mean, you want to get a raise and have more buying power, right? You don't want to go in at the end of the year. You don't want to fight for a raise. Maybe you don't get a raise one year, then you finally go in and you get a 10% raise the next year. It is difficult when you look at the fact that all that money is just gone paying for the groceries, but you are higher when you look at this. Now, nothing like what happened at the beginning of COVID when everything was going through the roof and pays were up. Pay was up 10% in the middle of that run in 2000, but nonetheless still higher, which is interesting. How much people carry in their wallet? Also interesting. $74. That one's down here, I think. No? Maybe they had a different one. All right. They do even talk about just how much people carry in their wallet. Yeah, there it is. Americans carried an average of $74 in cash in their wallets this year, up from $60. It is amazing how, just your mind, inflation. $60 turns into $74 when you have inflation of what? Of like 20 to 25%. It's almost exactly what inflation did. How remarkable is that, right? More cash in the bank as well in terms of where you were 2019. So what you're going to see in these charts here is that, yes, we've come way down from where we were, but we're actually above where you were in 2019. Just putting a little bit of the doom and gloom in context, right? Bank accounts, just over $3,000. The median checking and savings balance above where we were coming into COVID, which is at about $3,000 though. Pretty much right where we were. Credit cards. Now, we've seen credit cards spike higher. But when you compare it to as a share of disposable income, not back up to where we were coming into that number. Now, yeah, you saw quite a spike lower. But what's happened? Well, when you have pay that's going up, you might have disposable income that's going up, but it's a big number as well. And this is where up 6.6% from 2019, okay? but as a share of disposable income, not back up to the percentage level, which I found interesting in terms of where credit card debt as a share of disposable income, not quite back up to the percentage level that you were at coming into 2020. Yeah, still 62.18 per a borrower. That is quite a number when you think about where the higher echelon is going to be on that. Now, car ownership. This one is like bonkers through the roof, right? Change in prices since 2019. Insurance up 50%, maintenance and repairs up 40%. Yeah, and a car payment up 28% since 2019. That's 5 years ago, though. We know that we were dealing with 5 to 10% inflation. 5 years of 5% is 25%, and you're up 28. You compound it, you're probably there you are. Yeah, cars is quite a trip, man. Insurance, maintenance, all that stuff. Changes in rent up 30%. Not surprising when we've seen average home equity. Look at that one, right? And this is where the Fed is going to, this is the one I want to get to the most. Median annual home insurance, yeah, $1,765. Mortgage payment up 25%. But look at the average home equity. In 2019, average home equity was just above $150,000. We'll call it $175,000, okay? Now, if you have $175,000 home equity on a $350,000 home, you got 50% equity, right? And average is going to be pushed higher by the higher echelons, right? I'm not sure what the average home equity would be for a home that was, say, $350,000. It's probably a little bit below. You're not going to, the average equity is not going to be 50%. But the point being, it's very easy to take out home equity when you have 300,000 plus. So when rates come down and the possibility of a refinance is out there, look at the home equity. Look at the home equity. That is going to be a persistent thorn in the Fed. And the other side of that, as in if inflation comes back, the other side is there is a lot of stimulus that could come into this economy if we have weakness. That's the other side of this doom and gloom deal. The Fed has to cut from where they are right now. If we start seeing mortgages back down to a 5 handle, even a 4 handle, and you see the ability to bring this type of capital back into the market, you are going to see an acceleration, man, especially as we bring down rates from 5.25 to 5.5%, bringing it down to the realm of a more reasonable 3 to 4% if we're trying to stimulate the economy. Yeah. All right, we're going to come back. We're going to talk a little bit of rates. I found these ones interesting. Bloomberg. Now, this is an opinion one over here. We'll tease it a little bit as we come back. Jobs don't justify a half-point cut. Will inflation? John Authors. We'll talk a little bit of rates as, yeah, we are 9 days out from a Fed meeting, and the market still can't decide whether we're going 25 or 50 basis points. I was listening to Neil Dada out there from Renaissance on Bloomberg this morning. He had the view that they're going to go 50 because Powell wants to go 50, and Powell is going to unify for a consensus view of 50. Well, we'll see. Market up by almost 50 points right now. We got CPI will be an important one on Wednesday. We got a presidential debate tomorrow night as well. Stay tuned, folks. We'll be right back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps up by 43 points right now. We jump around to 2 equities with action. Dell up by 4.7. We got Palantir up by 11%. Look at that pop on the open. Yeah, some decent earnings from them recently. They're added to the S&P 500. We jump around to Apple shares. A little bit of a sell into that event going on, down by 1.3% right now, and that's with the NASDAQ 100 accelerating higher on the open. Yeah, Amazon up by almost 2% right now. Google, it was quite a trade-off on Friday. They're up by 1.3% right now for Google shares. Microsoft up by 1.5% right now. We check out Tesla shares. There you go, up by 3.5% for Tesla shares. All right, this one's an interesting one. Just going to touch on it briefly, talking about the journal here. A guide to why you should buy bonds and why you shouldn't, in parentheses. Bonds have regained the haven. Whoops. They're talking about property. Bonds have regained the haven property, okay, that made them desirable for 60-40 portfolios, but other factors matter more. Now, the one thing I wanted to get to here, okay, that I was looking up, which was interesting, and they're talking about, of course, you know, the correlation, the protection, the 60-40 mix has delivered negative total returns for only 23% of the years. Bonds are supposed to offset equities, less volatility. What was intriguing, though, is that they say in here, and this is the part, right? Because sometimes it works, sometimes it doesn't. We saw one of the worst years on record in 2022 when you had both of them diving lower. Someone who invested $1,000 in a 60-40 portfolio in the 5 years after 2009, for example, ended up with $1,439 in the bank, which is $1,100 less than someone who just bought the S&P 500. By comparison, the shortfall during the positive correlation period was only $561. But what I find is, you know, they're cherry picking a little bit to show how bad even things can be. So I said, oh man, okay, that was a rough year. That was a rough 5 years for the bond portfolio. Well, where were bonds in 2009 that people who were in a 60-40 got smacked hard compared to if you were in equities, right? So, okay, let's pull up the 30-year, just quick reference, and you go back to a max, not a 3-year, a max. And in 2009, the year began, you were buying at 137. You had a historic run up to low yield, right? You had higher price in the 30-year. In the year 2000, you're at 90. You went all the way up to 137, and then they cherry pick, and they say if you had bought a 60-40 portfolio in 2009 and you went for 5 years, well, yeah, because look, you bought it at 137, And then 5 years later, you're actually underwater, right? Because you bought at such a high point, low yield. You don't want to load up on 60-40 when yields are dropping to a lower degree. Now, that's context, because guess what? They just continued to drop until COVID hit, when we were at zero, lock bound on the zero barrier. But you compare that to something like what the S&P did over that time. There's your 2009 beginning. You go from 714 up to 2000. So yeah, there's different areas that go in there. And what I got out of that most was, don't think that you're getting protected when you're buying bonds at 0%. That's the thing. The return actually has to matter, okay? And just be careful. And yeah, you can tell Silicon Valley Bank that as well, as they loaded up on hold-to-maturity securities near the zero bound of U.S. long-term treasuries without realizing that they really weren't getting paid an interest yield on that, and they just parked a generational number of deposits into long-term yield at generational record lows of yield. And that's not going to diversify anything. All that's going to do is lock you into a bad trade when eventually, and boy, when you're near the zero bound and things start turning, they turn quickly. And you can see how even that spike at the beginning of 2009 for the 30-year, we zoom in on it, when you get a rollover, man, and you're approaching low yields, look at the trade from 139 then to 113. And then, yeah, you get it back, but nonetheless. All right, we got tech stocks plowing higher, and that's even with Apple trading lower. We check back in on Apple. Yeah, Apple down more than 1% as we got the NASDAQ 100 up by more than 1% right now at 18,600. All right, a couple other articles I want to touch on. I mean, this one's intriguing. Just on Friday, Google faces a blockbuster antitrust case again. Yeah, weeks after a judge ruled the company stifled competition in search, it faces a trial on its ad tech practices. I was talking to my dad about this over the weekend even, and, long term, Google's going to be fine, man. They break up Google. Yeah, you'd always love to own a monopoly that can stifle competition in the name of profits in the long run as an owner, not as a member of society. Probably not the best for society. But just think, if they ever had to spin off of YouTube, and these are not, you got YouTube, you got Google, you get everything. The sum of the parts is quite a valuable sum. But Google has, and what we're talking about, he was talking about, man, you got a huge underperformance in terms of where Google is compared to the other equities, right? You're right back to the 382 already. Look at that chart. Right at the 382, man, which is also the area that you traded lower at the beginning of the year in January, but Google up by 1.4%. But yeah, they're going to have a little bit of heat. Excuse me. What's so intriguing is it's almost right on the verge that they may be in the realm of losing their monopoly status. I mean, think about it. You have an antitrust case going on. At the same time, you had a huge acceleration lower when the market was worrying if ChatGPT was going to eat their lunch and their search dominance was going to begin to wane for the first time in a long time. Do both exist concurrently, right? Can the market be worried that they're losing their market share because competition is beginning to eat their lunch at the same time that you have an antitrust case going forward? Now, I understand there's many nuances, and I'm sure they are abusing some of those competitive advantages that they have. But boy, they're a company like none other. And YouTube, man, YouTube's going to take over the world, and they basically already have. You think about YouTube. YouTube's never going away, and that is something that's going to persist for decades on end, and we're always going to be getting served ads on YouTube. And I see it in my own house, going up and down the generational shift from 3-year-olds, my generation, the grandparents, everybody loves YouTube. It's, as we know. All right, what else do we got? Yeah, let's talk a little bit of China here. This is an interesting one, man. So, what's going to happen with China? China's deflationary spiral is now entering dangerous new stage. Government's trying to prop this up for a while. Prices seen falling through 2025 as wages and demand languish. Long-term deflation could be a major setback. I'd say that's putting it lightly, right? Economy-wide prices in the longest decline since 1999. And look at that. All right, broad measure of prices contracts for the fifth straight quarter. They got deflation, man, going on almost a year and a half now. GDP deflator, yeah, 5 separate times on a quarterly basis. They have been in the red there. We'll talk a little bit of China when we get back. We'll take a look. Yeah, you take a look at an equity like Baba. We'll talk some other ones as well. Pull up 10 cent when we get back. You got Baba down 0.6%. Markets, though, picking up with positive action after a tough week last week. S&P's up by 46. We'll be right back, folks.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&P's up by 46 points right now. Now, remember, you got Apple, 1 o'clock today. Their event begins. That could just move the market, of course, the biggest market cap company out there. You have presidential debate tomorrow night. Always room for a little bit of headlines to come in. Wednesday, we get the CPI. Thursday, we get the PPI. Excuse me, jobless claims, of course, in there as well. We'll see where we go. We're checking on yields. The 10-year right now, negative by just 4 ticks. We have caught a little bit of a bid from where we were early this morning, though. Up a bit as we get the 10-year, trying to get to green territory at 114.29. And we jump around to some of those Chinese stocks. Look at Pinduoduo, down by 2.5%. The owner of Temu, right? We were just at 150, folks. August 22nd. It's September 9th, and you're at 90. Be careful of China. You talk about it. Now, on the phone front, Huawei, they're coming for Apple's lunch. No, they're not. But it is intriguing. So they've had their own event, and their trifold phone gets almost 3 million pre-orders ahead of Apple's iPhone 16 launch, received more than 2.7 million pre-orders for its new trifold phone. Its website showed on Monday. They began those midday on Saturday, the orders, and that was more than 2 days ahead of Apple's launch. So they're getting in there, and check it out. They got the trifold. It is intriguing. I've seen a couple of those that fold in half. I wonder if that's going to be the future, right? Where are we going? Remember, we wanted keys on our phones at first. The BlackBerry was the deal. Apple showed us the way in terms of that not being the future. And now we have these phones that are bifold, trifold. It seems like eventually, of course, right, they're all just going to be a hologram that basically pops out of your watch, or a little chip on your wrist. Everything's going to pop up. It's going to be an augmented reality existence, or it's just going to pop up in virtual reality. But yeah, bifold, trifold, but almost 3 million phones is what they got. And check out this market, man. NASDAQ 100, we're up by 1.1% right now. And you are 330 points off of where we were. Yeah, 330 points almost. 320 off of where we were at the close of action on Friday. Market might be saving itself, at least for the time being. We will find out. Crude, 67.53, climbing towards Friday's lows. Gotta love cheap gas. Folks, thanks so much for kicking off your trading day right here. Stay tuned for Basil up next. I'll see you tomorrow morning live at 9 a.m. Stay tuned for Basil.